Hello everyone. Let us study Burnpur Cement Limited. It is one of a big cement manufacturers in the east of India, and the price is very reasonable. Last traded price for a 10 rupee face value as per the thing is 14 rupees 60 paisa. A comparative prices for India cement is 163 rupees. And JK cement is 832 rupees and Grasim is 1014 rupees. And then this company has given 1 rupee dividend on 19th August, 4 rupee dividend on July 16th, and October 16th, a 10 rupee share has been broken up into 2 rupee share. Now let us see the other fact sheet about the company. Its market price in 2016, 31st May, was 9 rupee 40 paisa. It's gone up to 14 rupees now. Face value at 10 rupees. And 52-week high low is 12.30 and 7 rupees. So it is reasonably priced. The Burnpur cement is incorporated in 86, and in the present avatar it has come into being in 2001. And it is now producing 1000 TPD cement. Is a major producer in the east of India. It produces Portland slag cement. Right? Now, its net worth has been increasing 98 to 104 to 112 in last 3 years. Its current assets have been increasing 45 to 52 to 63. Non-current assets have also been increasing 93 to 104 to 106. The total assets have been increasing from 139 to 156 to 176 crores. Investments were 76 to 82 to 85 also increasing. Finance cost is very reasonable at 2.55, 3.97, 4.54 crores. The long-term liabilities have been decreasing from 11.56 crores in 2013 to 9.06 crores in 2015. Current liabilities were 33 to 49 crores, and then with current assets at 63, they are reasonably 1.25 is the current ratio, which is good. The turnover, however, was static around 83 crores. Profit after tax was static around, had fallen from 3.17 crore 17 rupees to 1 rupee 17 paisa, and earning per share have fallen from 1 rupee to 0.14. So it is essentially a case of a company which is still in the makings of a big company. It is just now putting all its items in order, and it has just started its real journey. So there is a lot of upside for this particular company because of housing and infrastructure being the thrust areas for India. In eastern India, this is one of the bigger units. It has started its grinding unit, it has started clinkering unit, it has started its own items on these counts, and cost of power and fuel are likely to be reduced. So its turnover, let us examine the turnover ratios. The turnover ratios, inventory turnover is around 4.47. It can come down from 5.97 to 4.47, but still it is good enough. And debtor turnover has come down from 4.6 to 2.34. Maybe they have become very slack in recovery of debtors. It was good in 5.4 in 2014. Only in 2015 it has come down to 250. More than 50% fall. Reasons have to be examined most probably. Fixed asset turnover 0.89 to 0.77. It could have been at least slightly better. And current asset turnover 1.85 to 1.30. It's on the downward trend, but still okay. Now this is operating margins. Operating margin has become half, 5.6 to 2.9. Net profit margin has become half, from 3.7 to 1.4. Return on assets are more than half, 2.2 to 0.69. Return on equity has come down again to 1/3, 3.3 to 1.04. Return on capital employed has come down from 8.2 to 5.7. And the current ratio is 1.29 and okay. Quick ratio is 0.92, nearer to 1, it's okay. Working capital turnover is 5.74, it is still okay. Debt to equity is 0.23, very low debt company. Interest coverage is 1.38, it is good enough. And market cap is 1.07. Market cap per PAT is 25.45. There is the promoter shareholding from 32 to 27%, of which 90% of the promoter shareholding have been pledged to institutions, banks especially. The other institutional shareholding is 0. Public other shareholding is from 67 to 72% because of warrants being encashed. That is the position. Now let us see the 2016 balance sheet of the company, how it has worked. They have appointed Ashok Gadgutia as a managing director for a period of 5 years. He is one of the promoter directors. And they have reappointed Manoj Kumar Agrawal as a whole-time director for the period of 5 years. He is also one of the promoter directors. At a reasonable rate, their salaries are 1 to 1.5. Unfortunately, there is one item, Mittal Polypacks, which is a related company. A related company has been given the order for supplying bags, rate being 12 rupees and 10 rupees, which is quite high. And they have also a comment saying that any significant increase or decrease in raw material prices will be considered for revision in the bag price. That means they are giving the choice to the supplier to increase the price, which is not a good corporate practice. Then another thing that they have given a related party transaction is Burnpur Steel. They want, they say Burnpur Steel, they said is a new brand, even though this company is from 2001. And they have given this brand requirement, branding and advertisement contract to a related company, Burnpur Steel Company, which is a proprietary function. I think this is a cover for paying money to either the MD or the directors, other directors who are interested in this Burnpur Steel Company, and which is not a good corporate practice. And the total amount that is going to be siphoned off in this way is about 4 crore 20 lakhs to 7 crore rupees in 17-18. It's a sizable amount, and the banks should take into account this particular aspect. Now its sales have increased from 8231 to 8799. It's only at 7 to 8% increase. EBITDA has increased from 780 to 1740, sizable 1000 crores increase. Interest, unfortunately, has increased from 454 to 1331. So this interest has actually eating into the whatever EBITDA has been and profit before tax. Therefore, has fallen from 172 crore to 6.71. Deferred tax is another major activity here, minus 0.12 in 15 to 1276 crores in 1276 lakhs in 15-16. So profit after tax, adjusting for the deferred tax and interest and other portions, has come to minus 1270. The profit after tax is decreased by 56.75%. Company has started commercial production of the Patra 2 plant. Its full-fledged production of grinding unit has started in 2015. Clinker unit has started in December 2015. Block 1 and 2 Hariharpur, Leh, Bacha stone mines have been allotted to the company through e-auction. There are three very good news for the company. Amount transferred to reserve is 1270 crores after tax, and the change in share capital of the company has increased from 82 crores to 86 crores because of allotment of conversion warrants of 10 rupees each. The company has no subsidiary, that is the declaration that there are no joint venture, but there are two related parties, companies which are already spoken of, which have not been taken into account. The percentage increase in remuneration of mainly the CFO and company secretary are very, very high. The Sajjan Kumar CFO, his salary is increased by 17.02%. SS Panigrafi, his salary increases about 33.33%. The percentage increase in remuneration. So the two very large financial related people have allotted to themselves much larger amounts. The industry, the cement industry is now in a very good position. India is the second largest producer of cement. It has attracted huge investments. India has a lot of potential. Lafarge, Holcim, Heidelberg, Vicat have invested in India. India's cement demand is supposed to be increased to 600 million in 2025. Housing accounts for 67%, infrastructure 13%, commercial construction 11%, industrial construction 9%. Cement capacity is likely to go up to 421 MT. The country's per capita consumption is low at 190 kg. Okay. And then increased production in the Patra 2 plant for this particular company is its positive point. Profit before tax has decreased by 96 points due to increase in finance cost. Clinker unit and other things have come into play. And because of all these things, the infrastructure as clinker and like other grinding units have now come into play. In all probability, going forward, it's going to be a good time for this particular company. Now, total income, as I said, 83 to 94, it has gone up. And total expenditure has remained almost static, and profit before has increased 780 to 170 because of the interest has become negative. The incremental spend on smart cities is going to add to this particular company's demand. none of the transactions related party. That is the declaration they have given, which is obviously wrong. So they are this company is into covering up the vested interests of some of the either promoter directors or some other directors who are powerful there. And then in the corporate governance, they have issued 1 lakh and above, uh, uh, 10 lakh 1 and above number of shares, individual shares is 73%. So most of the 73% relates to the owners. The body's corporate own 60%, promoters have 27%, non-promoters have 72% of that. Monthly high and low prices are ranging from 7.6 to 11 and now 14. So last 1 year it was between 7 to 12, and this year 2017 it has gone up to 14. So it is on the company is on the upward move. So because the demand is more, because the company has got all its procedures functioning worked out well, so there is a possibility and the company will have a benefit. The main thing is the interest payment is very high. Let us see the interest payments, interest position. The principal amount secured loans have gone from 181 million to 2345 million. Total is 2527 is the total indebtedness. So in the case of tax, these people are very they function on the border of legality and morality. So they have very high cases against the government in all value-added tax and central tax everywhere. Each and everything is being appealed. Each and everything is being contested. And even in case of income tax also, they have contested about 83 lakhs payment and 3 crore 80 lakhs payment. So that appeal is pending in income tax appellate tribunal, which may affect the future profitability. And in the case of the banks, there were defaults, and the defaults have been rescheduled of interest, and then the rescheduled interest has also not been paid. Both for Central Bank of India, it is of the range of 214 lakhs, and then that's for interest rescheduled, and 58 lakhs current interest not paid. State Bank of India, 231 lakhs interest rescheduled and 55 lakhs interest not paid. State Bank of India, 266 lakhs interest rescheduled and 23 lakhs interest not paid. United Bank of India, 30 lakhs interest rescheduled and 55 lakhs interest not paid. So they are functioning not in the interest of their banks which are giving them, but they are trying to take as much benefit as they can take from the banks. The long-term borrowings, as we said, is high, and deferred tax liabilities are also there. Short-term loans are also have come down. Long-term loans are more, short-term loans are less. The profit is always on deferred because of deferred tax. It's a loss-making company. So because this functioning of the company is not good, functioning is not the company is not in the interest of all the stakeholders, but still the demand for the product is there. It's a very big company. Its rate is very less, 14 rupees only for a 10 rupee share. So it is good for people who are interested in buying this particular. Right? Okay then, consider this.